Hello, everyone. We are live with Danielle Desousa. I Coffee and Learn with Denise. She is awesome. She's a mortgage lender for more than 4 years, and she really cares about the person she's gonna pre-approve. So, Daniela, tell us a little bit about you. I'm so excited to be here with you. Tell a little bit about your background because you were a realtor before, and then we go from there.
Okay. So let's see, I'm from Michigan originally, and I moved to Florida in 2000. And I got my bachelor's degree from Daytona State. And I was working in the corporate world for probably about 13 years. So I worked from large property management company, and I started pretty much at the bottom, and I worked my way up to the corporate office. At that point, I had a child, and I needed to be a little bit more flexible with my schedule because my husband works for the sheriff's office. So I went into real estate, and I did real estate for 3 years. And I was one of the top producers in the brokerage that I was at. And that is where it kind of led me into lending. As a realtor, I worked with lots of lenders, and I wouldn't have known about that industry really until I became a realtor. And that's when I realized that that was really more for me than real estate sales was. And so I'm in my 6th year as a mortgage lender now.
Okay. Yes. So I'm so glad, that you found your passion because it's so nice when we work with our heart, we can do better for others. And tell me a little bit, if I'm a new buyer and I don't know what to do, what is the process to be pre-approved? What needs to be done on that way? And tell me a little bit like the background, what do you do to help that person to be approved?
So it's really kind of, are you ready? If the buyer is ready right now, then the first thing before they even talk to a real estate agent, they really need to get pre-approved first from a lender. And that is when they apply online, and they're going to put their income, their assets, we'll run their credit score and see what they can qualify for, what kind of house they can buy. If that person is like, I'm not sure if I'm ready yet, I really want to understand the process first. And so I love to do that because I like to educate people, and I like to, it doesn't matter how long it takes, but really just to kind of educate them, like, okay, let's get your budget in order and work on your, make sure your credit score is really high, because the higher the credit score, the better the interest rate you're going to get. They're going to save money in the long run, how much money you're going to need, and, just a whole bunch of things. And then explaining the process that it goes to me, and then it goes to processing, then it goes to underwriting. And there's a whole process that I love to educate people prior to them actually going under contract.
And that's what I love about you. It's because you really care about that person, and you're going to prepare that person to be ready, right?
Yes.
It's just not like, okay, I'm here, let's get this done, we're gonna sell. No, what I like about you, it's because you educate them and get them ready for that step. So I think that's why we connected so much, because I'm also a realtor, and I just don't care just about the sale. I care about the person. I care if they're gonna be able to afford in a few years their house. I care if they're happy on the house that they're gonna purchase. It's not like, okay, here's the house, let's ready for it. I like to be, also to prepare that person same way as you do. So I think that's why we connected so much.
Yeah.
And tell us a little bit about the programs that it's out there.
So there's a couple. Typically with first-time home buyers, the majority of them go into an FHA loan, but an FHA loan isn't a first-time home buyer loan. A lot of people think it is, but it's actually not. But FHA it's a lower down payment. So somebody would be like 3.5% of the purchase price. So the purchase price is $300,000, 3.5% of that is $10,500. So it's a lower down payment, where a lot of people, if you're $300,000 and 20% down, $10,000 versus $60,000 is a really big difference.
Right.
So it allows for a lower down payment. It also has there's something that's called a debt to income ratio. So that's the amount of debt that somebody has with the mortgage and then what their income is. So sometimes with some loans, the debt to income ratio might be like a 45%, but a FHA allows right before 55. So it gives them a little bit more purchase power. And then typically with the FHA, the interest rate is a little bit more competitive when you're paying 20%, less than 20. So if you're paying like 3.5%, you do have what's called mortgage insurance. And sometimes with FHA, the mortgage insurance is a little bit less as well. So FHA is a great first-time home buyer loan, but and first-time home buyer within the lending industry means, and you don't have to be a first-time home buyer to use FHA, but first-time home buyer in the lending industry means if you haven't owned in 3 years. So it doesn't mean that you owned a home 5 years ago and you're not a first-time home buyer, you can't buy ever again, or as a first-time home buyer, and that's not true. As long as you haven't owned in 3 years. Another program would be, there's like home ready, home style, and that's through Fannie Mae. And those can be 3% down to 5% down. They are a little bit more strict when it comes to credit score. So for FHA, you can go down to a 580. I don't recommend that though. And I really try to work with people to get them to like at least a 620, a 640 is best or better, and higher is better. I would much rather that, because the amount of interest and the amount that they'll pay for discount points for that interest rate, it's so much. And usually like a first-time home buyer, they can't come up with all of that. So really better to just increase their credit score first. But with the 3%, the Fannie Mae, the credit score requirement is higher, and the debt to income ratio is lower, so it's more strict. But with that one, the mortgage insurance will automatically drop off after they have 20% equity. Typically they do have to, you probably have to call the mortgage servicer and just be like, hey, I've hit 20% equity. They might have order an appraiser, to come out and just make sure. And then that mortgage insurance will drop off. FHA, the mortgage insurance is for the life of the loan. So it does not go away. What I typically recommend, because most people are first home buyers for the FHA. So usually what I recommend is after about 3 to 5 years, you probably have enough equity in your house at that point, and refinance to a conventional loan, drop your interest rate and drop your mortgage insurance. And then the payment will be lower.
That's an awesome tip right there,
Mm-hmm. Yep.
That's awesome. Yes.
Yes.
So Danielle, thank you so much for all the information. Is there anything else you'd like to add to help others? I think we got a lot of nuggets today. It was amazing.
Yes. So we have just rolled out a new down payment assistance program, and this is with FHA, and it allows you the person to borrow the down payment, and it will go as a second mortgage. So you have your first mortgage and then you have the second mortgage for the down payment, and it's 0% interest. And there is a forgivable and an unforgivable, but the forgivable means that as long as you pay your mortgage on time for 5 years, that money is forgiven. And it really is a great program. I've just implemented, and I just did 2 applications yesterday. And it's exciting because there's no income restriction, and which on other down payment assistance programs there is. They have a cap of income. So there's no income restriction, and the debt to income ratio is much higher even. And it really has been helping that. So if you, just one quick thing, if you have a $300,000 house, the down payment is 3.5%, like we talked about. So that's $10,500. But then people have closing costs. So you're looking at somewhere between 4 to 5% of closing costs, right? So really for a $300,000 house, for a first-time home buyer to buy that, it's going to be like $24,000.
Exactly. Not a lot of person has that. Yeah.
Right. So now, as a realtor, that you can help the buyer, and we're in a market now where you can negotiate
There's tons of
concessions.
negotiation. Yes.
Yes. So you can negotiate the seller concession. So that's one aspect. So if you can get, 10,000 towards the seller concession, well, that reduces that amount for them for 14,000. Great. Well, what if they were able to get a down payment assistance for 10,500? So then they're looking at coming to the table with maybe $3,000 or $4,000.
Wow, that is amazing. This program, I think it's going to help tons of buyers. Wow.
Yes.
And especially right now that the way that rents are, I think it's so nice that we are here and we're educating those who are renting, to think about it, like how much you paying your rent for. And with this new program, oh my gosh, it's a life change actually.
Yes, it really is. And I just did too yesterday. And I mean, the amount due at closing, it went away, $10,500 went away, I mean, on the back end, and then if they get seller concession, it's a whole different ball game now. It really I think it's going to open up a lot of doors for people, and I'm really excited about it.
Yeah, me too. Yes. I think this is awesome news. Wow. This is amazing.
Great. Yeah, absolutely. So I would say, if you want more information, reach out to me. And if you just want to kind of start the process, reach out to me. I have 5 tips to start the process that I would love to share. And I'm here for any questions.
Perfect, Danielle. We're also going to put all the contacts and all your information below on this video. And so everybody can access you or me.
Yes.
And thank you so much for your time.
You're welcome. Thanks for having me. I appreciate it.
Denise Fernandes, your go-to realtor. See everybody soon.